Okay, this one is the disposal of property, plant, and equipment. Okay, disposal means you want to dispose means like remove or eliminate or delete the asset or PPE. Okay, journalize disposal by recording cash recording cash received or paid, and recording a gain or loss, and also removing accumulated depreciation on debit. Okay, and then removing the asset cost. Okay, normally the accumulated depreciation is on credit, right? But when you dispose a PPE, you have to record accumulated depreciation on debit, and then the asset will be on credit, because you want to remove. If you want to remove an asset, you have to remove the asset and then the accumulated depreciation. Okay, and then regarding the gain or loss, if the cash that you receive, for example, you remove, or okay, we use the dispose. For example, you dispose the PPE, the asset, right? And then you can get money because you sell the machine. If the cash bigger than the carrying amount of the machine, then you will get gain. If the cash smaller than the carrying amount, you will get loss. But if the cash that you receive equals to the carrying amount, so no gain, no loss. Let's see this example. A machine costing 9,000, and then it's already depreciated for 9,000 on December 31st of the previous year. And the machine is discarded on June of the current year. The company is depreciating the equipment using straight-line method over 8 years with zero residual value. Okay, so the machine the machine costs 9,000 and it's already depreciated for 9,000. So you're gonna discard this PPE. So how you gonna record this? You will record accumulated depreciation and machinery on the credit side. You remember, you discard or remove or dispose this machine, so you have to record machine on credit, right? Because the machine is decreased, you're gonna remove them. So machine on credit and accumulated depreciation on debit. Okay. And then here, scenario 2, equipment costing 8,000, and then it's already the machine already depreciated for 6,000 on December 31st of the previous year. And then the machine is discarded on July 1st of the current year. The company is depreciating the equipment using straight-line method over 8 years with zero residual value. So step 1, what you need to do, first you have to update the depreciation expense. Okay, because this 6,000 is only until December 31st of last year. Okay, but you sell this, you discard this equipment on July of this year. So meaning that there is 6 months more of the machine to depreciate. So from January 1 until June 30, the machine is depreciated for 500, right? So you will record depreciation expense on July 1st, depreciation expense 5,000, and then accumulated depreciation 500 and 500. And then on July 1 also, when you remove or discard the PPE, you will remove your equipment 8,000, right? And then the accumulated depreciation is 6,500. Not 6,000, not this one, but you will add with 500. So this one 6,500. Okay, and then this one is not balanced, right? This one 8,000 and here 6,500, meaning you need another 1,500 on debit side. What is it? This is loss. Okay, loss. Why you call it as loss? Because actually, the machine is the equipment 8,000. The cost of the machine, the equipment is 8,000, and it's already depreciated for 6,500. Actually, the carrying amount is still 1,500, but you decide to discard this, to throw, to maybe to donate this machine to someone else or to another company, or you just throw it away. So you call it as loss on disposal. Okay. How about selling the PPE as the second-hand asset? On March 31st, BTO sells equipment that originally cost 16,000 and has accumulated depreciation of 12,000 at December 31st of the previous year. Annual depreciation of this on this equipment is 5,000 using straight-line method. Annual depreciation on this equipment is 4,000 using straight-line depreciation. The equipment is sold for 3,000 cash. Okay. So on March 31st, you have to update first the depreciation. Depreciation expense 1,000 and accumulated depreciation 1,000, right? Because this 12,000 is only December. Only until December 31st of last year, but we're gonna sell the equipment on March 31st, meaning that you need to add more 3 months. Okay, the machine is depreciated for 4,000 every year. So because this is only 3 months, so it's only 1,000 depreciated. And then step 2, record the sale. So how you will sell this machine for 3,000 cash. So you will record cash 3,000, and then you remove equipment 16,000, and then you remove the accumulated depreciation for 13,000. 12,000 plus 1,000. Okay, it's balanced, right? Okay, how if, using the same illustration, how if you sell the equipment for 2,500? Here you sell it using 3,000 cash. So that's why no gain or no loss. How if you sell the equipment for 2,500? So you will record cash 2,500. You remove the equipment 16,000, and then you remove also the accumulated depreciation 13,000. So this is 16,000 on credit. This one 15,500, not balanced yet. So you write 5,000 on the credit side. So this is loss on disposal. Okay, but how if we can change this illustration. We can also sell this to be 3,500, and then you can change the journal entries by your own. So if the equipment sold for 3,500, then you will see here 3,500, and then you will write 5,500 here as the gain on disposal. Okay, I hope you understand.